All right, let's talk about the big corporate story of the day, which is the merger of Zee and Sony. The deadline was yesterday, and it has indeed gone through. The announcement has been made. So now the new combined entity will see Sony holding over 50% stake, close to 51% stake actually. And the promoters of Zee will have a 4% stake, that is the Goenka Chandra family, in the combined entity. This entity will be publicly listed, and the terms of the deal is that the promoter family can increase their stake through open market acquisitions by up to 20%. In fact, a non-compete fee of over 1,000 crore rupees will be given to the family to buy that stake and bring it up to 4%, which is pretty much their current stake. A lot of details have come out through the day of what the combined entity will look like. Punit Goenka had an investor call earlier in the day. My colleague Utkarsh was tracking it and brings us all of these details.
I think the most important part of the whole conference was the focus on sports and sports rights. Now, Punit Goenka at least 5 to 7 times mentioned sports, almost 3 to 4 times mentioned the IPL. And there were in fact talks of the fact that will the company have enough to give the amount of cash is required in the first year. If you have a 5-year deal, and Punit Goenka said that we have it and we'll be aggressively bidding for it. And it's not only IPL, it's other sports as well. So that is something which is very important for Zee, and we can see the bidding war in the next year's IPL contract, television rights to go on. He also mentioned the fact that he will not go for only television rights. He will need television plus digital rights. Is something which he clearly mentioned what he was speaking about. Then let's move ahead and speak about the keeping two OTTs different, because you have different apps for and different channels. So what is the idea? What is the brand gonna be? Now what Punit Goenka said is that once the merge identity comes in together, they will take a call. But according to him, though every brand has a different identity, has a different customer base, has a different audience, and has a different liking of content, and that is something which is very important to the channels. So more or less they will continue, but he said that he will leave it to the merged entity and the board to decide whether to go ahead with this or not. And the third one is about merger and acquisitions with the cash on board, which Sony is bringing. Punit Goenka didn't rule out the fact that there can be a possibility of more M&As going forward, and the bidding was in movies can be more structured, given that you have both the Sony and Zee now together. One interesting part is that the movie production and the music side of Sony is left apart in the deal, and of Zee is the part of the merged entity. So how will that also work out? Is something which is very important. We'll have to really figure this out. But these are 3-4 main pointers of the conference from Punit Goenka.
All right, so what happens next for Sony Zee, the combined entity, in terms of the Indian media landscape? Will building a cogent, successful OTT platform be the biggest challenge, really? Because while both are large legacy players, their streaming platforms have not been top of the heap and face stiff competition. Right now, they may have separate platforms, but will they go ahead and manage to put in the money required for a successful one for the reach it needs? Punit Goenka has also spoken about interest in the sports segment and how IPL will definitely be on the cards. Will that be a good bet for them? On the other hand, the other questions, of course, remain that clearly this is a great deal for Sony. It's a great deal for the Zee promoter family. What about Zee's investors? Have they got a good deal out of this? What about all the issues of corporate governance? What about the issues that Invesco has raised and continues to on a legal platform? So to answer some of these questions, I'm joined today by Karan Taurani. He's Senior Vice President at Elara Capital, Hetal Dalal, President and COO at IiAS, and Shriram Subramanian, MD of InGovern. Welcome to all of you, and thank you so much for joining us. Karan, I want to get your thoughts first on what this mega entity means. It will now be the second largest media network in India, and the stiffest competition today is to the Star network, isn't it?
Right, as you rightly said, the entity will become too huge once they both come together. I think we have to look at the TV and the digital segments separately here. So, firstly, speaking about the TV segment, I think they will largely come on par with Star, just tad below in terms of viewership share numbers or in terms of the ad revenue market share. But what this does is that the sheer size of both these entities are so large that they kind of become irreplaceable. They'll probably have 45 to 50% of the ad revenue market share, which means that TV 18 or a Sun are too small to come back to their size. So that's one huge advantage which is there. Second thing is that as you know, there are no overlap for Sony and Zee, and if the execution on content and strategy is good, then I think going ahead they can give a very tough fight to Star, and even in fact surpass Star if they are able to do well in terms of the synergies put together. So that's the TV segment which looks highly compelling and can probably grow above industry averages and has a potential for further market share gain. Now coming to the digital piece, things are completely different here. So Sony, Live, and Z5 in terms of revenue size are too small, and if one can do the math, even if you add the revenue of both these platforms together, they will somewhere be close to 50% of what a Hotstar would be in terms of revenue. So clearly, this goes to show that these platforms don't have a scale. And if you look at the numbers in terms of the OTT advertising, in terms of the SVOD revenue, I think OTT advertising is highly skewed towards aggregator-driven platforms, towards sports content, which is there. So, which is why once both these platforms come together as a merged entity, it is very important to scale up the sports offering, because Sony Live today also has more a sports offering, but it is not as compelling enough, which is why the numbers are so low. So I think a lot of work has to be done on digital in terms of how things go ahead, because that is the future. TV as a business is more of a mature business, growing at mid to high single digit CAGR revenue, or earnings CAGR would be probably even lower than that. But digital is the key here in terms of, because digital video advertising or digital OTT market is probably poised to grow at 25-30% over the next 5 years. So I think there a lot of work to be done on digital in terms of content initiatives, in terms of investing into the large scale franchise web series, in terms of getting sports, in terms of distribution, because it is not only a Hotstar which they're competing with, there is also the like of global giants like Netflix and Amazon, which are giving even a stiffer competition. So I think a lot of work has to be done on digital for now.
No, so absolutely. No, so Karan, what are the immediate challenges you see for the new entity in terms of the monies they have to put in? Like you said, Hotstar is one of the leading players, but here they have to invest in the digital play in the full glare of investors who are going to want to see returns, and it is an expensive business right now. So do you see that as one sticking point? The sports play, how big of a challenge will that be?
Yeah, so two things one can do on digital. One is, of course, get a lot of large scale franchise web series, because that is something which is going to drive a sticky audience. I mean, just by making content or just by making 50 new web series a year is not going to drive eyeballs. It may drive initial eyeballs, but they may not be sticky in nature. So I think one initiative would be, drive large scale franchise web series. And, fortunately, they should have a very high success ratio, because these are web series which require a lot of huge content investment. I mean, the kind of per episode cost would be in the range of, 2 to 3 crores for a large scale franchise web series. So I think you have to be very cautious in terms of what you are investing, what is the kind of content. Secondly, I think sports as a business proposition, if you see, even when Zee had 10 sports, they were making losses. So, making profits in sports is a challenge. But effective distribution, globally, and also in terms of some kind of efficiency in terms of how you drive the ad rates, is something which can lead to profitability. We've seen what Star has done with IPL versus what Sony did with IPL. I mean, it was a complete turnaround, right? I mean, Star has already started making profit after the third year. So I think it's all about execution on sports, which is very important, which will drive profitability.
Yeah, absolutely. Hetal, let's come to the point of how does this work out for Zee investors? We know it's a good deal for Sony because they get a larger footprint. Of course, for the Zee promoter family, this is a fabulous deal because Punit Goenka gets to stay on at the helm and has executed a very successful merger. What about it from the point of view of Zee investors?
So I think there are a couple of things which work for Zee investors. There are a couple of things which don't work for Zee investors. So let's look at what's working for Zee investors. I think just the fact that we now are part of a larger, sort of company which has material stay in the media segment, and therefore the synergies and the ability to grow as a larger business is clearly a positive. I think the other piece which actually works for the investors is that while Punit Goenka remains in the seat, and we can debate whether that's good or bad, the board composition now will have dominant control by Sony. So that effectively means that there are now guardrails around, related party transactions, financial leakages. There is oversight, right? And I think that was an adult supervision. And I think that is something which was clearly needed for Zee. Um, and if you look at how MNCs typically operate, right, what they also do is change the CFO over a period of time and therefore have tighter control over purse strings. So I think this also works well for investors in the longer run. I think what doesn't work for investors is the sweetheart deals, right? The fact that 1100 crores is being paid out as non-compete, which you may argue comes back into the business, but effectively what happens is that the Goenka family is not getting diluted vis-a-vis all other shareholders getting diluted by almost 50%. So the question is really, what is the need for the non-compete? Now you can argue, what do you argue really on the non-compete, right? Are we saying effectively that the family is going to start a competing business while they're already invested in the merged entity? And to be fair, while undoubtedly the business has been built, it is a reasonably sized business and dominant player even now. The time at which Zee started to how the dynamics are today as far as the industry is concerned are completely different. And the business is growing digital, at which point in time the family and the company haven't been able to do much in that space. So really, to argue that there is a need for a non-compete is difficult for investors to stomach. But this is really what the element which doesn't work for shareholders. In the balance, it's also, of course, going to be how Invesco looks at this deal in terms of because that's going to be also a very critical decision maker in as far as the votes in terms of how they play out. But yeah, this would be the pros and the cons.
Yeah, Shriram, is it sort of a fait accompli for Invesco that is battling essentially the board of Zee and the promoter family? They wanted to call an EGM. They have a problem with related party transactions. They had an issue with this 4% to 20% option and the non-compete clause fee. But now that the merger has pretty much gone through, do you think that Invesco will have to eventually back down, or do they have enough space to carry on their charge?
Good evening. In a sense, yes. I mean, if Invesco doesn't back down, it will be hurting itself to a large extent because it is still the largest owner or the largest shareholder of Zee. What this deal indicates is that the Zee promoters, which is the Goenka family, and Sony are willing to forget the past and move forward. Even the non-compete fee, right? I mean, if you look at it in the new age companies, there is what is known as a ESOP kind of a thing or a retention bonus. This is like a retention bonus, can be thought of as a retention bonus because nobody has challenged the leadership of Punit Goenka in Zee. Zee continues to be a operating cash flow with very solid, one of the highest operating cash flow media companies in India. So from that perspective, I think Sony's recognition and the platform that they are giving to Punit Goenka as MD of this merged entity and still plonking $1.1 billion shows a lot of faith in Punit Goenka. One. Two is, so from that perspective, if minority shareholders were not to support this deal, they are not looking to the future. They are still hankering on the past. I think, as Hetal said, yes, there is a choice that you have, whether you look forward to the future or whether you still dwell on the past.
Karan, do you agree with that sort of analysis that for Invesco right now to pursue their grievances would be like cutting your nose to spite your face because they also stand to gain from this merger?
Of course, if you look at Zee as a company in terms of what has been happening in the last 3 years, since the time they announced that they're looking for a strategic partner, the stock has just, derated one way downwards. And there are multiple reasons. Of course, there are concerns on TV broadcasting, concerns on threat of digital. But the larger picture here is, in terms of corporate governance issues and, the investor confidence, which has really been coming down. So I think this is the need of the hour wherein they have a perfect strategic partner. They are moving towards consolidation. I think having a strategic partner like Sony is the best thing they can do right now. It is much better than having a kind of financial consortium in terms of the strategic partners what they had earlier. It brings a lot of stability to the business. You have an MNC board which is controlling. You have got a lot of synergies with the company. You have a kind of a go-to market strategy which is kind of very similar. And today's time, I think the content business is going global. I mean, it's all about storytelling. It's all about taking your stories global. So I think, Zee can leverage this advantage in a very big positive way, wherein, at one point of time, maybe 3 or 4 years down the line, Sony and Zee become so large as an entity that they are giving a tough fight even to global giants because they're able to cross-sell their content effectively across the globe. So I think it's an ideal scenario for Zee right now.
Yeah. Hetal, when it comes to the question of Invesco and where it goes next, how do you see that panning out? Because that case is still very much in the courts. Do you see Invesco eventually backing down?
I think that's a question for Invesco, but I think a lot of one side of it is just the litigation which is happening. I think they will see that to the end. I also think Invesco is not going to bring in a decision until they see the fine print. Right, what we have today are the broad contours. When it finally comes to the shareholder vote, I suspect there'll be a lot more detail which gets which is brought to shareholders when it comes to vote. So I think until there's clarity and they see that through, I think the jury is still out on what Invesco is going to do.
Yeah. Shriram, I want your take on how the family has handled all of this. A few months ago, Punit Goenka seemed like he had his back to the wall. And really, it's also a story today about amazing corporate maneuvering. And we have to accept that that's what we have seen. He's gone from a situation where his largest shareholder wanted to do everything he could to boot him out to a place where he's in the saddle. His family has 4% and he's partnered with a global giant.
No, firstly, it is naive to think that this deal happened just because Invesco tabled and called for an EGM, right? I mean, no deal is going to be announced on September 22nd and put together in 10 days, right? I mean, as they have announced today, it has happened over probably last 1 year. I mean, the final details may have been worked out in the last 1 month or in the last leading up to September 22nd. But I mean, so from that perspective, it is naive that they were back to the wall or anything. They knew that they had no shareholding. They knew that they had to look for some other deals. Probably that's one reason why this disclosure that Invesco facilitated a discussion with Reliance, etc., also was there. So they have been talking to people. I mean, even with Sony, there are this one report that they were in discussion with Sony 2 years ago. So from that perspective, they were always deals counting. So it is not that Invesco pushed them to the wall. But definitely, yes, the outcome that has come out from where it was 3 months ago to what it is now, definitely it's a good deal for the promoters. Punit Goenka is in saddle. But nobody is going to plonk $1 billion+ to just keep him just for the heck of it, right? I mean, so it is just a recognition, right? I mean, they could have well said, no, we will have our own guy, probably Mr. N.P. Singh, who is the CEO and MD, as the MD of this merged entity. And to that extent, I foresee that in future, the name Zee itself may not exist, right? I mean, right now itself, it's sort of a reverse merger into Sony Pictures Network India Limited. So from that perspective, they have not announced what is the name of the resulting entity going to be. So I even envisage that the name Zee may not exist. So that is the kind of control, that is the kind of let go that the promoters also have done. and that is the kind of control that Sony will also exert on this merged entity.
Yeah, absolutely. In fact, a conversation we had with one of the board members of Zee Entertainment confirmed that this is possibly what might happen because Zee is merging into Sony. Nevertheless, the situation has changed dramatically for Mr. Punit Goenka in 3 months. There's no denying that. We'll perhaps never know what happened behind the scenes, but the tough task to carry along now this media behemoth begins perhaps from today. Thank you so much to all of you for joining us on the show to break down the big corporate story of the day.